Hey, good afternoon. It's Todd Carpenter again here with your quarterly market update, the real estate market in Southern Utah. Just wanted to share some quick figures with you. But before I do that, just want to let you know we did move office locations. We're still with the same brokerage and everything, same team and everything, but we are at 308 West Tabernacle now. We're no longer at the location on 100 South. So just if you're in the area and wanting to stop by and visit, we have moved. So just wanted to go over these numbers here real quick though, and share on my screen here to go over what's happened in this first quarter in Southern Utah, and it's starting to show a pretty clear picture, I think, of what's happening and maybe what we can expect going forward this year. The biggest thing I wanted to share with you is that I think we're starting to see a floor created, maybe even priming ourselves for, I hate to use the word rebound, but room for price appreciation maybe. If not that, just at least a steadiness to the market. So if we look here, the number of listings, this bottom line here are the sales numbers. Okay. January 222, February 264, March up to 346, which is the highest since last July, I believe it was. June, sorry. The highest since last June. And we're going to show you another graph here of pendings, 405. So that, as you can see here, is the highest that we've seen pendings wise, looks like in a year. So even though the rates are what they are, people are still out there buying homes, and because they're need to make a move for one reason or another, whether it's they're moving to the area, whether it's family creation, just a lot of different reasons. I think we're seeing some investors coming into the market, swooping up these properties now that we've seen a price decrease of about anywhere between 8 and 10% on average. I think that there are these opportunistic buyers that are taking advantage of this opportunity before maybe the market starts to shift the other way a little bit. Especially we did have some sellers who were offering some pretty good incentives, and I think that also helped spark some purchases. Real quick here, so our median sale price, let's just jump down to here. Our median sale price year to date, this number right here, 499,725 versus 552.2 last year, so about down 9.5%. And this is year-to-date numbers, not just 1 month numbers. But this is year-to-date. So we've come down about $50,000 on average, or median, anyways, per home, which is not a bad thing, unless, of course, you bought at the height of the market. But if you've been in your home a few years, you've done pretty well. The days on market, which this number here, cumulative days on market, average and median. So right now we're at 51 days. It's about what it's taken to sell a home on average, where it was 11 last year. So things are sitting on the market, taking a little while longer to sell, but I think you're going to see, based on a couple numbers here, that's going to start changing. We look here, we've got these numbers here, 71.7, 70.4. So you're kind of starting to see this little bit of we had this correction happening here, and then we're starting to see this floor created. So it's going to potentially take less time on the market to sell. The other thing I wanted to show you is the list to sale price ratio kind of goes along with that. You can see here where this blue line here, just going down, 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 that's our list to sale ratio. So at what original price did they get, what percentage, and expressed in a percentage. So if you listed it at $100,000, most people are getting $92,800 on that home, where now you're starting to see it tighten up to, now they're at 95.3% of the original price. And this top line is after they made price adjustments, or what the last price it was on the market for, they're up to 98.2. So the pricing is getting better based upon what's happening in the market. Absorption rate, again, starting to see that level off a bit, getting into more of a neutral market territory, 4.13 months of inventory. So we didn't sell any homes, if we didn't take any new listings at our current sales pace, how long would it take us to sell through the existing inventory? And that's 4.13 months. That 4 to 6 months is considered a neutral market. So things are looking more balanced than they have in the last couple of years. And I think that's going to be the main takeaway here, is that we're getting back to a balanced market, and maybe more of a healthy growth market. Interest rates, 6.375 is what I was seeing today for a conventional loan. Last year at this time, they were 5%. When I worked the numbers on the difference between, let's say you paid $550 last year, which was the median sales price, and your rate was 5%, your payment would have been $25.75, including taxes and interest. This year at 6.375, let's say that that same home is worth $500,000, because we're using that median sale price, apples to apples. That payment would be $2708.65, which is a difference of about $130 is all. So you're gaining $50,000. I wouldn't call it an equity necessarily, but you're saving $50,000 that you didn't have to pay last year. Even though you're paying a little bit more per month, the question you have is, when you have to sell your home 5 years down the road, and you bought it for $500 versus $550, you're pocketing that extra $50,000, right? But you did pay a little extra per month in your monthly payment, to the tune of about $130. Over 60 months or 5 years, that computes to about $7,800, I think is what it was. So even if you deduct that off the $50,000, you're still ahead $42,000. So not a bad time to buy right now. We also continue to feel like rates are going to come down over the next few months. So get the good price now, and then we can work on the rate down the road. Last thing here, and I really wanted to keep this as short as possible, is it feels like there's a little bit of a tale of two markets. If you look here, let me get the right screen up, the sold listings. So overall, the number of sales that have happened year to date are down about 28.5%. But here's the interesting thing, is if you look at this price point between 200 and 450, they're actually outperforming the market. So there's more sales being done between 200 and 450, and then once you get to 450 on up to about a million, that's actually doing worse than what the market's doing. So the market's down 28.5% there, and we're down 33, 39, 47%. Interestingly enough, the 1 to 1.9 million is trending just slightly under the market average. So really kind of an interesting thing, that sub 450 market is looking really good, and I'm speculating that maybe we might be having sales happen here by those investors trying to pick up some rentals, whereas here the move-up market isn't quite as strong as it was. So anyways, I hope that information is helpful to you to kind of see where we're at and maybe where we're headed. With the rates being, they've fluctuated quite a bit. I've seen them as low as 5.5% over the last few weeks, and I've seen them as high as 7%. So we've got some work to do there, and maybe stabilizing those rates. But as far as being a buyer, being a seller, people are still buying and people are still selling real estate. So again, all real estate is local. So what's happening nationally doesn't necessarily translate to what's happening locally. So if you do have any questions about what's happening in our local market, give me a call, and I'm always happy to help you out as much as I can. Look forward to hearing from you, and have a great week. Thanks so much.